For more analysis on some of the wider implications of the North and the South talking on markets, I'm joined by James Tayler, the Head of Research at Morphic Asset Management. James, thanks very much for joining us. Now, let's talk about the North and the South. I mean, do you think that's having any impact on markets really at the moment, what's going on the Korean Peninsula in terms of maybe some sort of movement on talks?
Good afternoon, Helen. I think we've mentioned in the past that if you look at a chart of the Korean market, whilst the Supreme Leader has been executing his nuclear tests, actually the market has not batted an eyelid in respect to those tests. So I think it's unlikely to be considered a more important geopolitical issue for the moment. That's not to say that we shouldn't welcome constructive talks and positive moves in that area, but really there's no evidence to show a sensitivity there, equity market to this kind of issue.
Yeah, so let's turn to sort of the coming earnings season. What is your view about whether, will that have an impact on equity markets? That probably will have a lot more impact, I guess, really, than the geopolitical issue that we were just talking about. Can the momentum that we were seeing over the last few sessions, not so much today, but will that momentum, can it be sustained?
I think in reality that's a much more important driver, the forthcoming season's a reporting season. Look, the momentum has been strong, and we do not see any reason for this momentum not to continue for the foreseeable future, at least until companies start reporting. I think it's still likely that there are going to be some investors sat on the sidelines, either fearful of valuations and hedged, or simply running a lot of cash. And for them, they will be fearful of missing out on performance. So there's always, still remaining, a marginal buyer of equities.
Yeah, so what are you seeing will really be the big issues around this earnings season? What are boards really having to consider?
Well, I'm not one for making big predictions for the forthcoming year in terms of macro or particular outstanding company results.
Because I know you guys look very much at the whole risks of climate change.
If I had to make one prediction for 2018, that would be that climate risks and environmental risks are going to be talked ever more loudly in the corporate boardrooms of both corporate Australia and also our industry, the asset management industry.
Yeah.
The reason for that is fairly clear. First and foremost, the clients of our industry are demanding that their super or their savings are being invested in a responsible and ethical manner. A recent piece of research pre-Christmas from the Responsible Investment Association of Australasia, based here in Sydney, highlighted that 9 out of 10 Australians wish for their super and savings to be invested in a responsible and ethical way. Now, last year, ASIC, having chewed this subject for several years, is making louder noises about the corporate responsibilities of directors in terms of their approach to climate risk. And there are suggestions that directors may be in breach of the Corporations Act if they ignore or do not pay attention to material climate risks. Moving from the corporate boardroom to the regulators. Here in Australia, APRA making similar noises about how super funds and the financial services industry generally should be approaching climate risk. They cannot. It's simple. The industry cannot ignore what are considered controversial issues.
So they really ignore them at their peril, I guess, and it'll be interesting to see whether that comes up this earnings season. James Tayler, we will have to leave it there, but thank you so much for joining us. James Tayler from Morphic Asset Management.
Thank you, Helen.